You and I were talking this morning about just how many deadlines Greece has already missed. Zeb, you've been following the story. It seems like everybody has been following the story. That's 4 years old now.
Yeah.
Going on 5.
Yeah. Well, the recent game with the deadlines is a bit strange because they're
self-imposed. You're talking about the 1828 default.
There was no default on 1828. It came a few years later. No, I mean, the deadlines are funny because they're basically self-imposed by the Greek government. It's the Greek government that says, we'll have a deal in 2 weeks, and then nothing happens. So it's for domestic consumption, I think. I'm not sure why they're doing it, there's not really a deadline, at least not a hard one. And of course, we hear that it's going to default every month.
Yeah, we do. It never does.
Never does. And the reason is actually that if you look at there is a very good analyst, independent analyst, in the sense that not from the financial industry, so they're not trying to sell you a financial product, but it's a Brussels organization, it's a think tank. There's a lady there called Silvia Merla who looks at the Greek budget data, among other things, of course, but she writes about it quite a lot. And the most recent figures in April and in March, basically they're having a huge primary surplus, which is like way ahead of any both what is actually in the budget plan, which is according to the previous bailout program. So they're imposing much stronger austerity, even though it's an anti-austerity, which allows them to keep paying the debt. This is the main reason why
This is just because the primary surplus is what people have been looking at, and you know, I think they are looking at 2%, whereas actually the creditors are looking at maybe 4%.
Yes, prospectively. But right now they're imposing very harsh austerity. The people are buying it because it's something else if you impose pain on yourself, claiming that you're, defending national dignity or whatever. That's the way, it's obviously easier to sell.
Yeah, that's what confuses me right now about what Greece wants to achieve. Because either way, whether it stays in the Eurozone, whether it goes ahead and agrees to these reforms, or it doesn't, at the end of the day, it will end up being austerity. Say they default on payments. Then let's say there's a banking crisis, the economy gets hit, then you have to cut spending, you have to raise taxes. At the end of the day, it seems it's it's austerity one way or the other.
Yes, well, the question, I guess, is, this is also what Rish alluded to, is the degree of austerity. It's 50 shades of austerity, so to speak. But
it was terrible, Mikio.
But which looks better, staying
the bottom line is, there is a lot of huff and puff going on, but both sides are negotiating using the good cop, bad cop strategy. Greece's good cop is Alexis Tsipras. The bad cop is obviously Varoufakis. In Germany, we have Schäuble being the bad cop and Merkel being the good one. The net effect of this is, since the ECB has lent this year alone, since the beginning of the year, another 100 billion, which is 75% or so, close to 75 of Greek GDP, that's a lot of money. So you don't, it's not a sign that they're about to let Greece go when they just eventually double down on the lending already.
But clearly they will not allow this to go on forever. You hear the exasperation in Schäuble's voice, and Angela Merkel's been very restrained, but I'm sure behind closed doors she's losing patience as well.
Yes, right. But, the question is, if they will let a deal not happen, so to speak, they will have to take the losses. So which negotiating... Actually, Hans Werner Sinn, who has been an outspoken critic of this whole bailout logic and also, has favored the German economist who has been favoring a Grexit quite early on, he just came out very recently with a comment saying it's actually don't underestimate the negotiating position of the Greek government, because these guys know exactly what they're doing. And if you look at the process in the beginning, we've had a very strong German position or creditor position saying, we won't sign anything until you meet all the conditions. And as we get closer to the day that Greece effectively really runs out of money, you hear maybe we'll extend for 4 months, a default within the Eurozone is possible, negotiation climate is improving. This is a very recent feed, so I do think that Hans Werner Sinn has a case in point here. That whatever the headlines are suggesting, the Greek government's position is actually not that bad, and that is based on what we talked in the beginning, which is that they do have a large primary surplus. That makes your threat to default credible, because they only have a deficit because they have to pay the foreign creditors.
Mikio, tell me, what is the debt profile like? I mean, can they change the debt profile entirely, perhaps, and that way, you know, setting up perhaps more longer-dated bonds, etc., just ease the pain over many more years, perhaps, but lessen it on a year-on-year basis?
The debt profile of Greece is actually not bad. Its debt service to GDP is among the lowest in the world because they have already, a great deal with their European creditors. The IMF loans may be a different story, but they're not that large in the bigger picture. They have no debt repayments for another 3 or 4 years. They start in 2019. The debt is very long term. The interest rates are basically very favorable on friendly terms. So you could argue, why would they? The strange thing is, why do they make such a big story out of a very favorable deal? Well, that's the political question. So I don't think you actually need to do a lot with this debt. What is more necessary is to find a solution for the short-term funding issues which they have, which is the famous 2 billion this month, 2 billion next month. These are the money that, because these are all debts that need to be repaid before the new debt, which is on very favorable terms, starts to kick in 5 or 6 years. And of course, this is the time frame by which eventually they'll have to return to some kind of growth, which is the Greek government's position. They're right on that point. They need growth.
Okay, so let's say then we're going to assume that this thing is going to probably be kicked down the road again and again. What should we focus in short term? Is it the Fed? Is it divergence? Should we even care about the Grexit? Should we care more about ECB bond buying?
Well, there are not a whole lot, except for Greece, there's not a lot of risk out there, in my opinion. The U.S. is doing just fine. If you look at nominal GDP growth, it's 4%. Just do a 4-month average of the quarterly growth rate, it's 4%. It's been steady for 5 years. Everything else is noise. Goes up this month, comes down this month. Europe is recovering nicely because of QE, and Greece would be recovering just as well if they would participate. They chose not to. That's a different story. Brackets closed. Japan has had nominal GDP growth of 7.7%. I think I haven't seen that in a lifetime now, which suggests that it's way above capacity. So it's really only Greece, if they, and that would affect sentiment, of course, if that happens.